or just from the spend environment throughout the year. I think many came away with that perceiving that you were saying it's getting worse, not better. Can you just give us a little more color on that? Thank you.
No, thank you, Brandon. The first of all, I was making a comment which is sort of a global comment, not just a specific U.S. comment. I mean, there is only, I always sort of subscribe to that there's only one law of gravity that I think all of us are subject to, which is inflation-adjusted economic growth of the world. And then how many times that we grow. Because, as I said in my comment, Brent, I fundamentally believe, tech as a percentage of GDP is going to be much higher and on a secular basis. So the question is, how many times is it given the overall inflation-adjusted economic growth? So that's kind of how I look at it. Given that, I think the two things that we see, we commented on that even in the last quarter, and it's even in the outlook, which is the thing that customers are doing is what they accelerated during the pandemic. They're making sure that they're getting most value out of it or optimizing it. And then also being a bit more cautious on given the macroeconomic headwinds out there in the market. So given those two things, the point is the optimizations will end. In fact, the money that they save in any optimization of any workload is what they'll plow into workloads, and those workloads will start ramping up. And so one of the key things we are watching for, Brent, is to make sure that we are gaining share in this space through our value propositions, and even build loyalty with our customers, so that long term we are well positioned for share gains. So that's sort of fundamentally how we view it. And then the other aspect I'd also say is simultaneously investing in this new AI trend, because I don't think any application start that happens next is going to look like the application starts of 2019 or 2020. They're all going to have considerations around how is my AI inference performance, cost, models going to look like. And that's where we are well positioned again. So that's how I view it. The market, you all are better readers of, quite frankly, what's happening out there. We can tell you what we see. What we see is optimization and some cautious approach to new workloads, and that'll cycle through. But we do fundamentally believe on a long-term basis, as a percentage of GDP, tech spend is going to go up.
Thank you.
Thanks, Brent. Joe, next question, please.
Our next question comes from the line of Mark Moerdler with Bernstein. Please proceed.
Thank you very much. I'd like to follow up a little bit on this question relating to optimization. I know we saw some slowing this quarter. You're guiding to some slowing next quarter in cloud and Azure. How much of that do you believe at this point is truly people optimizing what they've already bought and stepping back before that, versus how much of that is due to macro factors themselves specifically impacting demand?
I'd say two things, and then Amy, please feel free to add. One is, it absolutely starts with workloads that they have at scale, just because of the visibility one has on what's driving essentially the consumption meters. And there's real guidance that we ourselves emit in the product to say, here are the things that you could do to optimize your billing. And so that's sort of what is the fundamental thing. When we say do more with less and how can we help, that's sort of the first place customers go to. And then the next piece really, I think, is going to be about how do they take the optimization that they get and the savings they get in one workload and what new project starts. And that's when I think there's reprioritization. When should we start the new project? Those are the two things that are happening simultaneously. They don't perfectly match, but one of the things is they're looking to bank some savings on some workloads and then start. So that's where I think a little bit of what has to happen is a cycle time where the optimization cycle finishes, the projects start, and then the projects ramp. And I think that's what, at least on the cloud consumption side, you're seeing. And on the per user side, it's slightly different, which is in per user also, there was real acceleration when it comes to purchases of per user licenses, whether it is for knowledge workers or frontline workers. And again, they're all now making sure that they're all getting used, and the usage is going up. Like when we look at our Office 365 usage, all those numbers are pretty, up year over year in a substantial way. Like I gave you some of the Teams numbers. In fact, one of the things was what will happen to Teams usage after pandemic. Guess what? They're up. And so those are that's good news. And now once we cycle through that again, the seats will get added and premium. Like I'm very, very excited about Teams Pro coming out in a couple of weeks. And those are all the things that we will be able to sort of use to, ensure that the ARPs are also going up with value.
And Mark, because I do think it's actually quite hard to separate from a driver perspective, how much is optimization versus macro. It's all related when you start to say, what's the best ROI I can get on every budget dollar I spend? And our job as a partner to so many of these customers is to help them do that. So Satya's talked a bit about Azure. Let me talk a little bit about the per user, where the way it showed itself is we had very high renewal rates and very good suite performance at renewal, meaning what we tend to call internally recapture. While we had some more challenges on maybe a standalone sale of a new product, where the cycle's going to be a little longer, right? You're going to have to show that cost savings. But the suite sale, the value in that showed itself in terms of strong E5. You can see the ARPU growth, and you can see the consistency potentially in both renewal rate and in, frankly, the Microsoft 365 performance.
Perfect. Thank you very much.
Thanks, Mark.
I appreciate it.
Yeah, thanks, Mark. Joe, next question, please.
Our next question comes from the line of Kash Rangan with Goldman Sachs. Please proceed.
Thank you very much. Satya, I'm curious if you could talk about how long the cycle time for optimization lasts. Are we talking a couple of quarters, few quarters, or multiple years? Because I do take your comment about tech spending as a percentage of global GDP going higher. So if that were to happen, how do you frame the duration of this optimization that's happening in the industry? Thank you so much.
Yeah, I mean, I think that you have a workload, you optimize the workload, and you start a new workload. So the thing that I would say is when you're done with optimizing a workload is when you are done with the cycle. So I think if you sort of say, when did we enter this? We accelerated a bunch of workloads during the pandemic over a period of 2 years. So we are optimizing. I don't think we're going to take 2 years to optimize, but we're going to take this year to optimize. And then as we optimize, the new projects start. And the new project starts don't start instantly at their peak usage. They start and then they scale. And so those are the two cycles that'll happen where there will be a time lag.
Got it. So it's a temporary adjustment before we start to get the full effect of the next set of workloads. Good to get that.
That's correct.
Thank you.
That's correct.
Thank you.
Thanks, Kash. Joe, next question, please.
The next question comes from the line of Karl Keirstead with UBS. Please proceed.
Thank you. This one for Amy. Amy, given the obviously tough environment, it sounds like reaching that full fiscal year 20% constant currency commercial revs guide would be tough. Is that also true for the soft guidance for 10% plus total revenue growth for the year? And if I could just sneak in a clarification, Amy, just because it's an important metric. When you talk about a 4 to 5 point decel in Azure, that's off of the 38% reported for December, right? Not off the 35 exit rate. Thank you.
It's off, Karl, let me just, the first half of your question, give me a second on the second half of your question, which is the guide off the exit rate? It's off the exit rate on Azure of 4 to 5 points. Just to make sure that is clear. In terms of thinking about total year revenue, you're right, I did not comment on full year revenue as we continue, I think, really just to watch the Windows PC market as it returns to pre-pandemic levels. Outside of that, as you can see, the trends are relatively consistent. So in some ways, it's important because when you look at the operating income margin guidance that I talked about, the fact that we're guiding to really only 1 point of margin deceleration for the year on a constant currency basis, with probably over $2 billion of headwind from the OEM business from what we had anticipated heading into the year. The focus on margins, the focus on prioritization, the focus on putting our investments into where we know they have high return. I actually feel quite good about the place that puts us in as we exit the year in terms of, and the right energy, right, or leaving the year in Q4 on leverage.
Got it. Super helpful. Thanks, Amy.
Thanks, Carl. Joe, next question, please.
Our next question comes from the line of Brad Zelnick with Deutsche Bank. Please proceed.
Great. Thanks very much. Amy, I wanted to ask about the expense actions that you announced last week. Obviously not a decision that you would take lightly. How are you thinking about headcount for the remainder of the year and the possibility for further expense actions if necessary? And what criteria do you consider in making these decisions? Thanks.
Brad, listen, thanks for that question. Obviously, as we think about the Q4 guidance around low single-digit operating expense growth, we start to, as you know, sort of lap certain real acceleration points that we had last year, and we lapped the acquisitions, both of Nuance and of Xandr. So by the time that we get to the end of Q4, you'll see very moderated headcount growth on a year-over-year basis, in addition to some of the prioritization decisions we've made. And you're right. We take decisions like the one we had to make to get our cost structure more in line with revenue just incredibly seriously, because we have lots of very talented people who were impacted by that. And so I do think that we feel confident in that exit rate. And as I said, it'll certainly imply that year-over-year growth as we lap some of the investment that we made will be quite small.
Thanks for the color.
Thanks, Brad. Joe, next question, please.
Our next question comes from the line of Brad Reback with Stifel. Please proceed.
Great. Thanks very much. On Office 365 commercial, with you guys approaching 400 million seats and the E5 business really starting to accelerate here on that consolidated sort of expense ROI that you're putting forth, should we think about the growth there more evenly balanced between seats and ARPU going forward, or still to continue to favor seats? Thanks.
Yeah, that's a good question, especially because this quarter you started to see a little bit more of that ARPU influence. And as you might have gathered from your question, and I'll just reinforce it, as we see some of these moderating seat growth, whether that's some of the new SKU weakness that we had talked about, some of the standalone stuff, you're starting to also see E5 ARPU happen at the same time. So it does create some stability in that Office 365 commercial revenue number. So we're seeing, still good seat growth, still growth across all workloads. And, as you're pointing out, we're getting further into the E5 health, where we've seen, I want to say, 4 or 5 really good quarters of E5 adoption. The value there is just very high for customers in this environment, between analytics, security, and I think, we've given some, good security data points in terms of adoption and voice. This is a place where customers can save money by moving to this suite. And I do think you're starting to see some of that ARPU help.
And we're also
That's great.
investing in outside of Microsoft 365 in other per user workloads. Viva being a new suite, Power Platform on its own, and even standalone offers like even Teams Pro and what have you. So there's a significant amount of work we want to do besides the sort of the suites that we all sort of have at scale.
Great.
Thanks,
Thank
Brad.
you very much.
Joe, we have time for one last question.
Our next question comes from the line of Tyler Radke with Citi. Please proceed.
Yes, thanks for taking the question. I wanted to ask just about how your visibility has changed in terms of some of the larger Azure customer ramps. Could you just comment on, to the extent those large customer ramps, or if any of those projects are getting put on pause? And then is there any way to just kind of quantify the AI potential contribution or maybe GPU powered contribution to Azure that you're expecting over the coming quarters? Thank you.
On the second piece, I think it's too early to sort of start somehow separating out AI from the rest of the workload. I mean, even the workloads themselves, AI is just going to be core part of a workload in Azure versus just AI alone. So in other words, if you have an application that's using a bunch of inference, let's say, it's also going to have a bunch of storage and it's going to have a bunch of other compute beyond GPU inferencing, if you will. So I think over time, obviously, I think every app is going to be an AI app. That's, I think, the best way to think about this transformation. On your characterization of the large customers, whether there is any changes in their trajectory, I would say I would point back to, I think, some of the commentary around every large customer is looking to optimize the workloads that they have at scale today and plow some of that money back that they save into new project start. So that's sort of what the classic pattern of large customers is. Sometimes you have ISVs who are different, right? So if an ISV is optimizing, they optimize and say, what is the
Hello, do you want me to move? Hello. Hello, do you want me to use the backup? Hello. Hello.
Ladies and gentlemen, please stand by.
I got it here.
Please resume on phone 2.
That wraps up the Q&A portion of today's earnings call. Thank you for joining us today, and we look forward to speaking with all of you soon.
Ladies and gentlemen, this concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.